Well, thanks for being here, everybody, today. Really, really great to see so many people coming to have a listen into this chat with Sinead Pratchett today and I. My name is Ali Ponsford Hill. If you don't know me, I'm primarily a freelance musician. I've been a singer, teacher and conductor for around 20 years. And recently I run my own business, on my own online business called Orchestrated Living, helping other musicians to feel more organised in their schedules, budgeting and finances. One aspect of that is going digital with accounting. I've been helping people to find better systems for their accounting. And so joining me today is Sinead Pratchett, and Sinead is the director of Orpheus Accounting Limited, a uniquely knowledgeable service for national and international performing arts clients. Sinead, can you tell us a little bit more about how you became a tax expert for musicians and your background?
Yeah, I'm very happy to do that. Hello, good morning, everybody. I see lots of familiar client faces. So for those of you who already know me, apologies while I just give a brief intro to those who don't know me. I started out as a musician. I trained at the Royal College of Music as a singer and then went to the National Opera Studio, and then sort of decided as I got to my late 20s, early 30s that it wasn't for me for various reasons, and slightly accidentally retrained. I actually got interested in accounting and tax because I was investigated by Inland Revenue, as it was known all that many decades ago when I first left college. And I was really fascinated by that process. So sort of started to take on my own accounts, and then did my husband Johnny's, who is still a musician, a working musician. And that began to expand into friends and colleagues. And I decided I ought to become a bit more official. So did some training and discovered, really totally to my surprise, that I absolutely loved it. In particular, I like the tax part of accounting and tax because I love how topical it is. I love how it intersects with all aspects of life, with economics, social policy, legal, numbers, of course. And more recently, there are so many musicians who need good tax advice that I've ended up just saying that's the only type of person we're going to work with. So we work with musician individuals and music organizations and musical charities, anything to do with music, sort of directly or indirectly. And that's me.
Super, thank you, amazing. And one of the things that we've been chatting about, and which I've been helping my clients with, is a transition to digital accounting. And there are people here I see lots of familiar faces who are familiar with digital accounting, but for those who don't know what we're talking about, could you just give us a little brief outline of what digital accounting is and how it might differ from traditional accounting?
Yeah, so that's a really great question. And also, I suspect the reason that most of you are here is because you're aware of the fact that not only do we need to define digital accounting, but we very soon are going to be compelled to use digital accounting as the means to communicate our accounts, our income and expenses each year or quarter, whatever, to HMRC. So the distinction really is to do with the fact that there is a digital interface that's transporting the information from your record keeping, which maybe traditionally would have been a piece of paper and a pen. And that is obviously, as we know, that's an analog system. It's not connected to the internet or to any kind of digital interface in any way. And the transition into a digital accounting really just means that you're going to use some sort of mechanism where the process is a digital system. So typically, although it's not the only version of digital accounting, typically when we talk about digital accounting, most people will be thinking about an app and a software app. So you see them on the tube, for example, QuickBooks, Xero. There are lots of other ones. There's Sage. There's a crowd called Get Coconut. I mean, there's umpteen of them. So I'm not here to recommend or unrecommend any one or another. But all of those are digital mechanisms for reporting your accounting because they're an app. So they're talking online, and ultimately the next phase is that they will speak directly to HMRC. Now, I'm not a tech person, so I don't want to pretend that I'm going to be defining this completely accurately, but my kind of interpretation of this is that the communication will flow directly from your digital app. Let's call it an accounting app for now. That will flow straight into HMRC. And that is different compared to the current method, which you might be thinking, well, it's already digital because I go online onto the HMRC software to complete my tax return. Surely that is digital. And actually the submission of the tax return, if you're using your government gateway account, for example, and you're submitting your own tax return, then you're right, that last step in the process is a digital step because you click submit and your tax return goes in, and that's definitely a digital submission. But the bit of that process that isn't digital at the moment is that you put in your numbers. I'm just looking down the list because some of you are my clients, so I know that you probably don't do this yourselves. But for those of you who are here who do your own tax returns, and maybe for those listening later who are completing your own tax returns, at the moment, you'll know that that process simply means working out your income and expense in one place and then taking that number and typing it into your online tax return before you then submit it to HMRC. So the fully digitalized journey will be a change from that way of doing things into a system where actually the picking up of the numbers in the first place, the income and expenditure figures that at the moment you might do on with a pen and a piece of paper, or maybe with a spreadsheet, that will move into a system where those numbers are being digitally pushed in directly into HMRC. And that's really what that transition into making tax digital for income tax is all about, is bringing in a step further back the process and making sure that the actual numbers themselves are also being reported digitally. In other words, they're being taken from a source document and pushed into some sort of a portal with HMRC. I hope that makes sense. And I think we've got the chat
that's
box.
really,
And
really helpful.
I'm really happy because it's hard sometimes not to be too technical. So please do raise your hand or, put a comment in the chat if that is not making sense. And maybe Ali, because I'm keeping an eye on people who might want to come in, if you wouldn't mind keeping an eye on chat for us.
Absolutely, I'll keep an eye on chat. Yeah, and actually that might be a good moment for me to say what my journey was briefly with digital accounting, which was that I tried a number of these apps that you've mentioned, and I just thought, oh, I don't know what that word means, and I don't know what this word means, and I don't know what I'm doing, and I sort of had real terror about it when I first began, and thought, I tried a few different things and thought it just really wasn't for me. And then it wasn't until the lockdown when we suddenly stopped singing and that my husband Simon, as you know, Sinead, did some training as a bookkeeper, and he started to use one of these softwares, and he said, oh, I'm going to sort myself out and sort out my own personal tax in this way using one of these softwares. And he set me up with it and showed me how to do it and showed me how to use it. And I went, oh, that's really straightforward. And it's sort of like a computer game. It's like a lot easier suddenly than I realized it had been. It sort of felt like, oh, I can use it almost as a sort of, computer game app to sort of put everything in the right place. And essentially it just does the spreadsheet for you is the way I think about it. It does that spreadsheet automatically. And actually you can do it as you go along in a way that actually was much more difficult. Historically, you had to sit down for those couple of days in January and go, tussle with all of the bits and pieces of your, receipts and everything that's flying around. And actually, it just takes away that, and it makes it a more sort of ongoing process that you can do. And as I say, a bit more of a sort of, once you get used to it, a bit more of a computer game app almost, and something you can do alongside. So that was my journey with it. I felt that actually people should know that it's really not that hard, and it's actually an awful lot easier, and you've got such a great overview of your accounts and things like that in a way that you haven't necessarily got such a good overview if you're doing it a year on. So that was my personal journey with it. Are you finding, Sinead, that more clients are starting to engage with it? And if not, why do you think that might be? What do you think might be holding people back?
Well, I think actually your comment at the beginning, and I'm going to ask you a bit more about it, your comment at the beginning about how it felt really confusing and some of the terminology that the apps use can be really confusing. I think that's one of the most off-putting things. So people are beginning to engage with it now, because we're sending out lots of messages that sort of say you really do have to engage with it now, scary as that might be. And the really good thing is that what we've been encouraging people to do is to engage with it now, this year, in the 25-26 tax year. Not necessarily to go the full distance and be a beta user of the HMRC trial scheme, which you can do if you want to go the whole hog, you could do that. But more to get the hang of how to use these apps, make all the mistakes you like, know that you can ultimately, if you make a dog's dinner of it, you can go back and use your old system to do your 25-26 tax information, prepare your accounts and your expenses and everything. But at least it begins to give you a sense of it. But my question for you, so I have a personal favorite, which I'll share in a minute, about how people misunderstand things in terms of the terminology. And I think it's a fundamental problem with these apps, is they're not really designed for specialist industries, of which music is one. So Ali, how did you get your head around understanding what they were asking for sometimes?
So I think really it was having Simon's help, because he'd had the training. Things like even just understanding what a chart of accounts meant. I didn't know what a chart of accounts was, but being told this is a folder, you know, each of these is a folder that you're putting things into. Having a sort of physical sense of it was really helpful for me to understand, oh, okay, so I'm filing it under my general travel, or I'm filing it under international travel, and understanding that a chart of accounts doesn't need to be something that's completely mysterious. It's just a filing system, and that you can also go back and undo things. I think that was crucial for me. The understanding that if I'd done something wrong, that it wasn't a problem, that I could go back and readjust things as I went along, and have a look into those accounts and change things and make it different. So for me, it was you know, having somebody that I could ask as well. That was really important to me. So that's what I'm trying to do for clients, is as we set them up with the digital accounting platform, they'll send me a question and say, what about this, or I can't get this to work, or what about that, and then we work together to try and make it more understandable and explainable, and things like opening balances and stuff that can be a bit tricky if people are starting with a bank account that's not starting from zero, for example, from £0. Then it can be a little bit tricky just working that out, and which column to put numbers in and things like that, which isn't totally straightforward if you're not trained in finance. Things like debits and credits, which traditionally have an understanding slightly differently with a layperson who's not trained in finances. It can be quite confusing, that, you know, it doesn't quite work in the same way when it comes to accountancy software. So just having someone to ask the question, I think, has been really helpful for me, and that's you know, why I've been trying to help others as well, is because once you kind of have the know-how, then you can pass it on. We have got a question here, actually. Anton says, so after you scan receipts onto a certain accounting software, do you need to send it off to HMRC? It isn't automatic at the moment. Do you want to answer that one, Sinead?
Yeah, that's a good question, Anton. As I understand it, and I'll be totally straight and say I'm not quite sure that's a very techie question as to how much of the digital information that's being held in the system is being forwarded to HMRC. I don't actually know. I suspect they don't have sight per se of the you know, the copy receipts or whatever that you might be scanning in. What they'll have sight of is the fact that you have this record of income and expenditure, and it will make a bit more sense to them than when they see how you've compiled, because they'll see the kind of cumulative record of what you've put in terms of income and what you've put in terms of expense, and there will be just something a bit more verifiable from their point of view. I'm just going to go back, if it's all right, and talk a bit about some of that technical language that these apps all use. The chart of accounts, for example, the opening balances, the debits and credits. So if we use Xero as an example, which is the software that we defer to in our practice, and I like, but they are all fundamentally the same. So for that reason, it's really important that you pick one that you like, that's a price you can agree with, and all of those kind of things, because they do ultimately more or less work in the same way. They just have slightly different bells and whistles. But using Xero as our example, so they, for example, when you get this, as Ali says, the default chart of accounts, which is, it's a great description to think of it as a folder, because it really is the folder of all your incomes, the folder of all your different types of expenses. And for example, when you go in on day one, all your income is called sales. Well, I mean, for a start, musicians never think of their income as sales. They think of it as fees or performance income of some sort. You know, you don't think of yourself in sales per se. So that's the first one. That's obviously reasonably easy to figure out. Some of the expenses can be quite tricky to understand what they mean. There's a facility within Xero, for example, to reimburse yourself with expenses. And again, it's because the app is designed for a great big institution that will have employees who are going off and incurring an expense, which then has to be submitted to the finance person who has to get approval, and then it has to be signed off, and then somebody else has to pay it. And there's a whole kind of process that happens in bigger institutions that for musicians using the app, it doesn't have any relevance and actually can just confuse things, because you start going down a road and then you realize that none of this actually is relevant to you. So when Ali is talking about making it, you know, talking to somebody and having a buddy, if you like, to ask questions of, I think something like that is really, really critical. And also knowing that most of these apps are highly customizable. So Ali was saying, just before we started this meeting, that she has a chart of accounts that she shares with the people that she's working with to help. And we also do something very similar. In fact, maybe what I'll do is I'll share it briefly. Let me just share my screen, make sure I figure out which one I want to share. This always takes me a minute. So I want that one. Okay, so I think you can see Xero as it stands right now, but I actually want to share this with you. So, you know, give us a shout if or speak out if somebody doesn't see this spreadsheet in front of us. But this is a really slightly terrifying looking spreadsheet for most people. But this is what's sitting behind the income and expense information when you categorize things in an app. And you'll see we've taken the fundamental information that Xero has, and then we've tried to put it in a context which makes sense. This is very much geared towards our clients for whom they have a spreadsheet that they're quite familiar with, that we've used over the years, that has things like lessons and coachings, or, you know, music, books and downloads, things like Spotify and iTunes and Coda and stuff that musicians use. So we've tried to make sure that it makes sense for musicians, and anybody can go in and adjust the chart of accounts to make it make sense for them. You can also do things like you can specify that this is what you want right from the very beginning. So it's really well worth having a buddy to kind of go, what have you used? Which bits have worked well for you? And then going out and finding, you know, a chart of accounts that's going to be relevant to you. The next thing I would show you is that if you then go to Xero itself, so this is what the app actually looks like. It has tons of helpful stuff to kind of teach you how to use it, and videos on YouTube and all of that kind of thing. But fundamentally, I always say to people, it looks a little bit like you're in your online bank account, and that you are dealing with transactions almost thinking about it as if you're in your online bank account already, and you're just categorizing. So instead of being in HSBC and being able to drop down and have a little click menu that says this was income and this was expense, now you're in this kind of third party location, but it's basically doing the same thing. It's giving you the ability to say, oh, this was income, it's fees in, but this would, I mean, ignore the fact that it's a business that doesn't make any sense for you, but this was expense, and you can then decide what it was that you spent it on. So for example, you'll go over here and you click a menu and it tells you these are all very typical, and to be fair to Xero, very understandable expense types. And you can use what they give you, but equally you can make these more relevant to you. You can override these with things like music, books and downloads, or lessons, or whatever it might be that makes sense for you. And from there, you just click it to say what it was, rent, for example, and you put in a few more details, and then it will do the going green thing, which is the bit where you know you're on the right track. You can click OK, and what it's done then is going back to Ali's description, it's put that expense in the folder of direct expenses, or in the folder of deputy fees or agent commission or whatever it might be. And it's done. And little by little, it builds your accounts that way.
And what's I think really helpful about that as well is people often say to me when we're budgeting for a year, and people have got a specific thing they're trying to save for, or they're trying to work out where their money is going, is often people think, I don't really know where my money is going. So I get a lot of that from people. I don't really know what I'm spending it on. And actually, when you can specifically see that in this particular area you've spent this much on music books, people are often quite surprised by what they've spent in different areas and what they might can sort of decide to change in their budgeting and their thoughts around different things. So yeah, it can be quite a helpful thing to know exactly where your money is going and what you're doing.
Yeah, definitely. It's very much, I mean, it's, to be fair to HMRC, to go back for a second on the whole premise, the idea behind making tax digital, although it feels like quite a burden probably to everybody right now, ultimately it's designed, first of all, to close the tax gap. In other words, to close the loophole of people who are not paying tax correctly, either deliberately or accidentally, but it's to help people minimize mistakes and things in the long run. But also, accounting, as Ali described it, that mad January rush where you sit down at the kitchen table and think, oh my God, that's 2 days of my life I'm about to give away going through receipts. It'd be lovely to think that you could get to the point where actually you're looking much more proactively ahead at how you're doing, and that from a click of a button you can kind of go, this is how much I spent on all of these types of things that I use in the business of being a musician. Wow, okay, I'm spending an awful lot on, you know, I've got multiple music services. Do I really want all of them, or am I going to pick one and go, you know, those kind of things. And it does facilitate being much more proactive and a bit more businessy in terms of how you think about how you're working.
Absolutely. Yeah, I completely agree. And I think it's changed my relationship with money actually to a positive, especially I've set up a system where I'm using a business bank card from which my Xero is talking, you know, my Xero is talking to that, and then I pay myself money, which makes me feel kind of a separation from my business, and I'm handling my money so much better as a result. And I think things like that can be really helpful in kind of learning to manage your own budgets, and or just managing them more efficiently, making more of your money, I'd say, in sort of understanding it better, knowing more about it as well. So
I'm so glad you've mentioned the one bank account, because if there was one thing I would say to everybody, and I'm beginning to bore myself with this as well, but if there is one thing that you take away from any of these kind of webinars that are proliferating at the moment about making tax digital and digital accounting and everything, it's get to the point where you have one bank account. So you'll see on this screen, for example, there's the business bank account is listed, and then it's got a savings account, and it's only looking at those two accounts. Those are the only two bank accounts that are linked to the app, to the digital mechanism that you're going to report to HMRC from. There's nothing wrong with having 10 bank accounts if that's what you want, but of course it means there's 10 different accounts to go through that process that we just looked at, of going through each of these lines. Sorry, my computer's quite slow. Going through each of those lines, you having to do that through 10 accounts is much more laborious than just doing it through one or two. So that would be the first reason. And the second is it saves you having to do endless reconciliations of Sainsbury's, Tesco's, Ocado, kids' playgroups, you know, birthday presents, whatever it might be. None of that is relevant to your self-employed accounts. So just that's the reasoning behind it, is to minimize the amount of legwork you'll have to do once you get into the process of analyzing and then reporting your income and expenditure. So just for a second to talk about this business bank account, it doesn't have to be an official business bank account. So if you're a limited company, you do have to have a separate limited company bank account. As a sole trader or self-employed musician, that's not required. But as Ali has done herself, and as we would all recommend, pick an account or set up a new one and take some time over the next few months to weed out all of the stuff that is not related to self-employment. Or if it's a brand new account, weed in your direct debits and your standing orders and the things that relate to your income and expense in terms of self-employment. If you do nothing else, that's by far and away the most useful thing you can do, because it'll speed you up in terms of digital reporting with an app. And we've slightly glossed over the spreadsheet option, just taking a massive step back to the whole discussion we had at the beginning about what is digital reporting. HMRC would also accept a spreadsheet. So something a bit like you might already be doing in order to comply with their Making Tax Digital for Income Tax rules. But the spreadsheet itself will have to have what's called bridging software. So something that takes the information in the spreadsheet and digitally transports it into HMRC's information portals. And that bridging software there's tools beginning to come out now. It's an absolutely sensible alternative for people. There's no problem with using it. And again, though, if you're just using one bank account, maybe with an attached savings account or possibly with a credit card account or something, you just download your bank statement once a quarter or once a year. And then you can do that same thing of categorizing everything as you go through. Again, it's to minimize the number of transactions you have to actually wade through and recognize. So yeah, if you do nothing else, get to a pared down existence with one bank account that deals with your income and expense. Ali, do you want to read out some of these questions and we'll tackle some of that?
I'd be really interested what apps people have. And someone said, I've tried Expensify, but now I'm using Metal and Free Agent. There are all these, as Sinead said at the beginning. Sinead and I both use Xero, but spelled Xero. But yeah, there are many things out there. And as she says, you have to find out what's the best for you and what works for you. As I say, it's quite helpful to have a buddy. So I've normally been helping people who want to set up on Xero because I know I have the kind of know-how with that software. I've also got a big a discount to help people sort of get on with it, and then they can sort of work out whether or not it's for them. But actually, you can use any of these. People use QuickBooks, all these different things. I wonder, lots of people are here to talk to find out about expenses claims for musicians and a bit of myth busting. I wonder if you might just run us through a few common claimable expenses that musicians perhaps overlook.
Yeah, I'd love to do that. Is it okay if I just quickly address one or two of the questions before we move on to the...
I'm sorry, I haven't seen anything further come through. Maybe my thing's being funny.
Yeah, so I'm going to go back up because they're sort of all within this same arena. So
sorry. Oh yeah, I'll try and get that. I'll find what's going on.
Katie, starting with you and the apps. Yeah, I mean, this is where a buddy or a community or something like that, where you can talk to other people about what they like and what they don't like, is going to be really useful. So again, those of you who know me will know that Musicians Tax Advisor is the community option that we've set up. And funny enough, it was originally set up with Making Tax Digital for Income Tax in mind. But and that is despite the fact that it was originally set up in 2020. The reason being, Making Tax Digital for Income Tax first came on the scene in 2015. I literally wrote an email to clients in 2015 saying this is coming in 2017, and then it didn't. And then I did another one a couple of years later, and another and another. Now it really is. But back then, all those years ago, I was already thinking, how are we going to manage this for musicians? How are we going to manage the extra workload? How are they going to manage the kind of adoption of all of this tech? The fact that we need to communicate much more regularly as accountant-client. Is there going to be a method where we can facilitate something that's going to be a bit more of a budget option, but nevertheless be still compliant with what everybody needs to do? That was the reason for Musicians Tax Advisor. So that is a community situation, exactly what we're talking about, a place where you can talk to other people, where there'll be education events, and it's still sort of in its infancy, but have a look around. Ali's group, the community, there'll be lots of other ones. There are already lots of other ones. Find the one that works for you and then talk to your pals within that group would be the biggest thing. Looking at the Expensify Metal Free Agent comment, I'd like to just mention this. So Expensify is obvious, as it sounds, is really just looking at your expenses. And I'm guessing, Anton, that you then import that in, or possibly you can even link it to Xero, I'm not sure. And it will just tackle the expense side of things. With all of the apps, what you want to look to is if you're just going to choose one app, for example, can they complete what's called the full software journey, which means can they take you from the beginning, the 4 quarterly reports you have to make, categorizing your income and expense, can they get you all the way to the end, which is filing your, as it's about to become known, your final declaration. It's what we think of as your self-assessment tax return. I don't know enough about Expensify to know whether it can go the full software journey, but knowing its original kind of design, the original reason for using it, I'm wondering whether that might be worth double checking to be safe. But great for categorizing expenses. Just have a look at where it is in its compliance with Making Tax Digital. Metal is a NatWest bank account, and definitely worth mentioning to everybody here on the group who might be thinking about setting up new bank accounts. So Metal is actually a NatWest account, and they have this incredibly jammy deal where if you have a Metal account, you get free agent software with it, completely free. And that is worth quite a bit of money. I mean, free agent, I think its monthly subscription is about 24 quid. So nothing to sneeze at there. Free agent is a great bit of software. And yeah, so that's a lovely tip, Anton, to everybody else is, take a look at both of those options. What you're looking for is free agent the app I want? If it is, then work backwards and go, okay, is it worth setting up a Metal app in order to get it for free? Are they going to keep it free, or is everything up for grabs? Which is another whole rabbit hole that we won't go down, but I suspect everything is up for grabs. Lindsay, to answer your spreadsheet and bridging software, this is a bit client specific, but I will answer it anyway. So for those of you who are clients of ours, of Orpheus or Musicians Tax Advisor, I don't know is actually the honest answer here. We are looking at a bridging software option. We're looking because the people we use to submit tax returns are about to offer a bridging software solution. So that sounds really good. And for those of you who are interested, that's Tax Calc. And you don't have to be an accountant to use Tax Calc. So there's another name for you to go and have a look at. That's a slightly more technical bit of kit. It's not particularly set up for kind of non-accountant users. But having said that, it has great help buttons and pages and things. So it is reasonably user-friendly. And you can just buy a single subscription to use it as a one-off individual, no problem. And here's the interesting bit. They're not releasing their pricing until the autumn. They're so much on the back foot in terms of pricing that they don't know. So we haven't made the decision yet, Lindsay, as to whether we're better to get a big bulk subscription for everybody, for Xero, for example, and mandate that everybody uses that because it's what we do, and there's an efficiency there with us saying this is the only one we can work with, or whether Tax Calc might come up with something brilliant for us. And unfortunately, although they've showed us the tool, they haven't showed us the money, and they've been very frank about it and said they're just not ready to put a price on it yet. So it really is very up for grabs. I think even people who are publishing prices, just be ready for the fact that things might change, but they will change across the board. So if one person hikes their prices, so will everybody else. It's going to be relative, but still it's quite unknown. Katie, practical question. Do you want to just put your mic on and ask your practical question?
Yes, that would be great.
Hi.
Hi, nice to see everyone. I'm feeling quite overwhelmed by this. I would imagine I'm not the only one.
I'm sure.
But I had this may be so straight. It's such a daft question that it feels a bit ridiculous. But I do have one account, basically, where I have everything now. When we're talking about this, is it going to be a question of going through line by line our bank statements and saying, no, that coffee, that's not an expense. That's not an expense. I have hundreds of coffees. Is that basically how it works? So
yes.
So okay. So when we're talking about moving business relevant things into a business account, it basically saves you the time of going through and saying no, yes, no.
Exactly.
Okay.
That.
Okay, that's really helpful. I have my follow-up question to that is, what in that case, what would one move? I may not need a separate bank account. I do only have the one, and it may be just easier for me to do it like that. But when it comes to HMRC, it's not just about business stuff where you have to report to HMRC. It's also, for example, gift aid and investments and that kind of thing. So now, do those stay, as it were, in your personal account, or do they move into a business account? How does that non-business stuff sit within this framework?
Well, I mean, that is a fantastic question, and it's going to lead us into the Ali part of this, which is the expenses. But I am going to address that really specifically first. I'm going to do that by showing you the way we've adjusted the chart of accounts, if you don't mind. So I'm going to go back to that in a second. Anton, I'm going to just quickly say your question about direct debit streaming music services, that's the same as Katie's. And the answer is yes. Move it into your dedicated account so that you're not sorry, I'm so bad at doing two things at once. I can't click and talk. Put it into your dedicated account so that, as Katie says, you're not weeding through lines that are nothing to do with work. And make sure your account, this is a really stupid recommendation, but obvious, make sure the account you choose will give you a card so you can tap it for TFL, so you can tap it for your coffees that are allowable expenses on the days out. And then make sure you have your other card with you for the not allowable coffees. You know, it is literally getting your head around that. This is my days out fun coffee card. This is my I'm at a rehearsal all day coffee card. It's that, and it's, yes, moving your digital streaming services, and it's moving, you know, it's making sure you pay for your lessons, for example, or your concert dress, which we will come to. All of those things get paid for from your work account. So I am going to talk about the actual expenses, but just before I do, I wanted to go back to Katie's question and why I would say, without it being salesy, I would say in the early days of something like this, if you're going to go for probably even the bridging software, but certainly if you're going for the app, it is worth making sure you get set up properly. So it probably is worth an investment with somebody, with Ali, with us, with somebody else. There'll be lots of people who can help you to make sure you get started in the right way. You will probably find that after a couple of months, you've got the hang of it, and you don't really need the support. But in the early days, that support is really quite valuable, and it won't be free from anybody, but I would say it's probably an investment worth making. To speak to that, I'm going to go back to this chart of accounts business again. So Katie, your question about what about all the stuff that goes through on your tax return. So if you see here, I've highlighted in yellow, these are all the transactions that go through a self-assessment tax return, but don't go through your self-employment as such. And, you know, as we know, as musicians, everybody sort of thinks, here's all my income and expenses, and they give us all their expenses. But we know some of their expenses are self-employment expenses, and some of them are tax return bits of information, but don't go in the self-employment. That's what you're paying for an accountant to do in part, so that's absolutely fine. But if somebody is now beginning to use Xero themselves, then they need to understand where to put some of these things so that they don't willy-nilly put stuff in the wrong place. So what these lines essentially are grabbing is, again, going back to the folder analogy, when we send somebody a chart of accounts, we set it up so that they will have a folder for personal pension contributions. They have a folder for gift aided charity. They have a folder for bank interest. We could add one for dividend, for example, Katie, or any other investment income that people have, because you quite rightly say that shouldn't be part of your self-employment in and out. But it does need to be captured somewhere because it's going through that bank account, and it will need to go on the final declaration / self-assessment tax return. So this is how we handle it. We put it all in a particular section, and it gets captured and put in a folder. But we've deliberately set it up so that it doesn't go into the group of folders that form part of your self-employment income and expense folders. Interestingly, we're in discussion with Xero at the moment, going back and forth with them, because this is their chart of accounts being modified in its current iteration as things stand today. But Xero literally only released their beta invitation to try it for the year last week. Middle of last week was when the invitations came out to say, sign your clients up if you want to have a go at this for a year to practice. So I'm actually in the middle of a conversation with them to say, will this chart of accounts continue to work? We know it works for us right now, but we're not putting those lines into a self-assessment return right now. We're capturing them and then putting the information manually into the return for the client. So our question to them is, do we need to update our chart of accounts so that this will all work? What have you done? Because they also will need to have added this to their chart of accounts. Funny enough, I ended up doing a lot of work with Xero Beta 2 years ago because I got pally with a woman who was running a big part of it, because I kept going back and going, yeah, but why don't you just do this? And I ended up, she went, some of these things are things that we don't often get questions about, because they don't often get musicians, they get like widget salespeople or whatever. But it's a really topical question. And Katie, this is the answer to your question as it stands right now, but that actually might change. But if it does, Ali will be aware of it. I'll be aware of it. The people who will be helping with the setup will be aware of it. So we'll support you. You said, yikes, hang on. Let me read. So would these elements in the non-self-employed, would these elements be in the not? So we'd have to go through. Yeah, it's a great question. And the honest answer is I'm not sure. I need to finish that conversation with Xero. And when we finish the conversation with Xero, then we'll know whether they should be coming out of your Xero linked bank account or your personal not linked to Xero bank account. My idea today, I'm pretty certain they should go through your Xero linked bank account, because ultimately Xero will be pushing everything into the final declaration. So it needs to know.
And what you can do, I think, if you're unsure about anything, is do put it through the Xero linked bank account. So do put it through your business's bank account, because you can always, as long as Xero has imported a transaction that says this thing has happened, you can always then go, actually, that's owner drawings. I'm going to put that into something that's not relevant to my tax return. For now, you can kind of say, no, thanks, we don't want to talk about that. Or if you need to split a bit of it, there's an aspect where you can kind of split the expense and say, I think, it's £20 of this that goes into my expenses that are relative to my self-employed, but £30 is my personal expense. And you can split the expense on Xero into those two things, but it has to have gone through Xero before you can do that. So it's better to have it go through than not. And actually, that one of the things that I do with people, and I don't know if this is right or not, Sinead, actually, is that at the moment if I'm doing something like traveling on work and it's mileage, what I'll tend to do is look up the AA route planner and look up the mileage at 45p per mile. How many miles am I going? I then screenshot how many miles I'm doing and what the amount is, and then I pay myself to my personal bank account from my business bank account. I pay myself that mileage amount, which then goes as a transaction into Xero, and I can say that was mileage to this place, and the receipt is the kind of a screenshot of the AA thing. So I've got a kind of receipt of the amount I've travelled. You can do it with all these things like Expensify. You can get other apps that are also quite expensive and all have subscriptions to kind of track your travel. But I think that's a really simple, straightforward way of making sure that you've captured your travel. Does that work from an accountant's perspective?
Yeah, I think that's a great way of doing it. Absolutely. There are even simpler ways, but I think certainly when you're doing it yourself, keeping it understandable and also remembering what it was. Like for most of us, we'll go back 8 months hence and go, I have no idea what that was. So a screenshot and a memo about it makes really good sense. At the risk of, I know I'm repeating myself, but I am just going to come back and say one more time, exactly as Ali said, you're better to have more information in your Xero account than less. She, absolutely correct. You can take it out of all relevant accounts by putting it in a particular place if you want to, but my feeling is that yes, you will need to be capturing your pension contributions, your gift aid contributions, your investment income, your employment income, because ultimately all of that will be populated into your final declaration, just like it is now in your self-assessment return. So save yourself the legwork of having to add it in manually later, capture it now. But if you then discover that something changes and you don't want it, then owner drawings is the default. Ignore this, it was a mistake account, or this was a birthday present, it's got nothing to do with anything account. And that's what you'd use owner drawings for. So yeah, you won't go wrong doing that.
kind of really quickly also, if we had everything in one account, it would be a question of going, no, yes, no. And then you don't miss anything. Because
yes,
it feels
you
like
could do
the
that.
really important thing is not to miss stuff by mistake, or, you know, because that never goes down well. So having multiple accounts feels very complicated, unless one of them is a dedicated account. But actually having everything in one place, and then it's boring going, no, that was a coffee, no, that was a coffee, but it's complete. Is that?
Yes.
Okay.
I would counter that though, Katie, by saying that I think people who do it all from one account rather than having a business and a personal will more often go, oh, I don't think that was business because it was a trip to Tesco, and forget that actually it was on a working day between something. Whereas if you just put it on your business card, you know that it was a relevant expense that you absolutely could do. I think people tend to forget about those things and underclaim as a result.
Yeah, and also, Katie, from a selfish point of view, if you are, I think that's also a choice that you'd need to consider when you're making it as a person who's dealing with things yourself, versus to if you're paying somebody to work through this on your behalf. Because, you know, speaking as somebody who does sometimes have to wade through 600 lines of Ocado, that's costing you money because it's taking our time. And again, even for that very practical reason, you want to set things up as well as you can so that it's as easy as possible, not only for you, but also for the people who are supporting you. Yeah. Anton, to answer, and it kind of goes like this: if you put the coffee on the wrong card, it's the same sort of thing. Your streaming subscriptions, direct debits are on the wrong account. Yes, you can absolutely journal them in to Xero, include them in. There's ways to get them in. Totally still tax deductible. The fact that they're not in your notional dedicated work account doesn't mean they become no longer deductible. They absolutely are. Those are the tax deductible concept is completely different to the mechanics of where the payment is coming from. So the mechanics of how you pay for your tax deductible expense has no bearing on whether it is a tax deductible expense, which takes us nicely into expenses, doesn't it, Ali? Right, do you have a few like hot favorites?
Yeah, sure, absolutely. So I've got some specific questions that people have asked. So a regular place of work is one. So this person says, I know we're not allowed to claim travel to a regular place of work. What does this mean? So they have a Sunday job that runs for approximately 31 weeks of the year on mostly regular timings. Presumably this counts as regular work, so the travel cannot be claimed. But what about a weekday special service at the same church? I've no employment rights or contract at this place of work, just a guarantee of being asked first.
Yes. Okay. So this is a great question, and I'm just Googling to see if I can pull up an easy link to there was a very famous tax case about this. And if I put that, I need to put it in that context. So the rule, the verbiage around this is not very helpful. The expenses to a place of work, which are where the place of work itself is habitual and regular, are not deductible. So in my opinion, that's habitual. Then you need to define what is habitual and regular. I would say things that make something habitual are, if you don't show up, is everybody going to go, oh my God, where's Ali? What's happened? We expect her at 9:30 on a Sunday morning in this church service rehearsal, ready to sing with us at 11 or whatever it might be. That's and if you are there every week, unless by prior arrangement, where, for example, you might book your DEP, I would say that's sounding pretty habitual and regular to me. Peri-teaching falls into the same category of habitual and regular. But there is the definition itself of habitual and regular is somewhat unhelpfully, it's defined as the ordinary usage of the word. And of course, it's a subjective concept of what is habitual and regular. So you have to, I think you basically decide, is this pretty much a safe gig, recurring job for me? Am I missed if I don't show up? Do I have an email associated with it? Do I have a regular place of work? If you're a peri-teacher, do you have your teaching room that you always go to? And if you go in on a different day, somebody's in your room? And likewise, if somebody came in on a Monday and they were in your room, would you go, hang on a minute, this is my teaching room? Those are all things that would say to me, that's pretty habitual and regular. And in those scenarios, personally, I would say that's not deductible travel. If the travel is not deductible, it follows that the subsistence is not deductible. They go together. So where the travel is allowable, the subsistence becomes allowable. If the travel itself is not allowable, then the sandwich at lunchtime is also not allowable. The case that really threw the cat among the pigeons with this was a 2015 court case called Dr. Samadian. Hang on, I'll put it in the chat. And that was the context to help you kind of figure out where do you sit on the sort of this line of subjectivity. He was a private consultant who consulted in 2 different hospitals over the course of a month. He had a surgery in one hospital every other week on a Friday, and he had a surgery in another hospital, every other week on a Tuesday or something like that. But he's self-employed private medical consultant, and it was deemed that his consultancies were habitual and regular places of work, and therefore his travel and subsistence to those consultancies was not allowed. It follows the same rule of employed travel not allowable. So you're not allowed to claim the travel to your employed work. So if you're PAYE for your peri teaching, for example, it's a done deal. You can't claim your travel. If you can't claim your travel, you can't claim your lunch. It's where you're self-employed for these habitual and regular jobs that it becomes much trickier. But I would take a look at Dr. Samadian. There's also another court case called Horton v. Young, which also had quite a lot to do with how people sort of analyze what's allowable and what's not these days. But just to myth bust a few things, it has nothing to do with how far away it is. It has nothing to do with how long the day is. What are some of the other ones? It has nothing to do with being inside the M25 or outside, which was one that I used to get quite regularly.
What about away overnight?
Overnight travel. If you're away overnight, chances are you've travelled to be away overnight by definition, and therefore your travel would be allowable, therefore your subsistence would be allowable. However, if you travel to the same job every week on a Monday and stay overnight on a Monday, but the job itself is habitual and irregular, you're always there on a Tuesday, so you always travel up on a Monday, I would question that one.
So I've understood this, that expenses are claimable around a job, that as long as it is not habitual and regular. Is that right?
As long as the job itself is a self-employment job and the job is not a habitual and regular job, yes.
So let's say I go out for a 9-hour day. I've gone out early in the morning, I've got a session, I'm going to have a coffee on the way to it, I'm going to have some lunch, I'm going to have a coffee after lunch, I'm going to do another 6 hours, I might have my dinner, and then I'm going to do another 3 hours, and then I'm going to go home. My travel, my coffees, my lunch, my dinner, it's all claimable.
Yeah.
Super. That's super
yeah.
clear. Thank you.
Yeah.
Colin has asked, if one has a mixture of being employed and self-employed, would you recommend 2 bank accounts, one for each type of employment?
Colin, I actually wouldn't, going back to the same idea that I'm not entirely sure yet how your employment income is going to be captured by, let's say, Xero, for argument's sake, for the purposes of their final declaration. So I'm projecting forward 3 or 4 years from now, where you're putting through what we currently call your tax return, but now it's your final declaration and it's going through Xero for argument's sake. It's going to need to know about your employment income just the way we need to know these days for your self-assessment return. So I'm going to say I would put it through the same account that you analyze everything from, but I would, going back to that yellow band that I was showing you earlier, we, for example, have a folder in our chart of accounts called employment income. And by definition, when you see your net wages, after tax, after pension contributions, after NIC coming into your bank account, as you do once a month, in that instance, your drop-down menu choice is employment income. And then Xero grabs it, sticks it in the employment income folder. It doesn't have anything to do with your self-employment, but it is available to populate your final declaration aka self-assessment tax return.
Super.
Yeah.
There's another question around splitting travel. We sort of covered this a little bit earlier. But say, for example, if at the moment, if someone is, they want to get the Oyster cap by using one card with their travel in London. So what if they're doing, perhaps something that is allowable, the expense, going out to go and do a gig, but then they're spending the rest of the travel for personal use that day. How can they handle that?
Yeah, I would say with all of these things, there's a facility in your self-employment. It applies to mobile phone, to car usage, to broadband usage if you're working from home, to clothing to a degree. All of these things as a self-employed musician usually have an element of personal usage and an element of business usage. And typically what you would do is you would allocate a proportion to business and a proportion to personal. And that's very easy to do, for example, when you have an app, because as Ali mentioned earlier, you can set things up so that it allows you to sort of specify what that percentage is. So that would be the absolutely perfect kind of gold star treatment of that particular transaction. Having said that, if you're only going out in the first instance to do the all-day rehearsal, and then you happen to be staying in town and having dinner with friends, for example, in the evening, and then using your travel card to come home at the end of the night, in that sort of scenario, the personal benefit is entirely incidental to the fact that you had to pay for that travel to get to your self-employment in the first instance. And I think technically, yes, you should quantify some of it as personal usage, but in reality, if you wouldn't have gone for dinner, but for the fact that you were in town all day working, personally, I would feel comfortable just taking the full amount of the expense. But I will say other accountants might say, no, that's not absolute, so it depends on how incidental the personal use was really, and whether you can sort of say to yourself, well, frankly, I'm only tacking that on because I'm in town working anyway. In that sort of scenario, the reason for the expense was to support your self-employment. I'm okay with that.
Mm-hmm. Great. And Anton says, maybe a silly question. No silly questions here, Anton, but why is it important to claim tax deductible items? Does it make your income look smaller?
Yeah, it's actually a really good question, Anton, because there are two sides to this. Yes, it will reduce your taxable income, which in turn will reduce your tax bill, which is why most people do. Johnny, for example, does a behind the sofa scramble each January when he realizes that he wishes he had been more careful about the coffees that he put on the wrong account, for example. Everything you put in, which is an eligible and valid expense, it will reduce your tax bill ultimately. So that's a very good reason to do it. However, the flip side of that, of course, is that if you need to evidence a strong income, for example, maybe because you're hoping to get a mortgage in a couple of years or something like that, then by claiming absolutely everything and massively reducing your taxable profits, those are usually the figures you supply to a mortgage lender. So it correspondingly makes you look less attractive as a mortgagee, albeit it reduces your tax bill. So there is a swings and roundabouts scenario that you have to be aware of. And I would say, if for those of you for whom this is an issue, as it happens, we did a thing on this a couple of weeks ago, and it's on our website, I think, or if it's not yet, it will be really soon. The recording, we did a whole session with a mortgage advisor who specializes herself in working with musicians. And we tackled all of this kind of stuff. So go and take a look at it there. But yeah, short answer, smaller income equals smaller tax bill.
Fabulous. That's really helpful. Thank you. Can we just a couple more specific questions on tax expenses? One is, what about concert dress and makeup?
Yeah, great. I did want to talk about this. I'm trying to pull up, I'll try and do it before we go. I sent an email to, let me just see if I can do it while we speak. So there are the rules about concert wear. Let's talk about that first, separate to makeup for a minute. And meanwhile, I'll try and walk and talk and pull up a sent email at the same time, which has links in it exactly to do with this question. HMRC's default position is that clothing, I can't remember the exact word they use. Again, I'll put the case in here. Oh, no, I won't be able to spell it properly, so I won't put it in. It's to do with a very famous court case for a barrister whose claim for black court wear was disallowed on the basis that her clothing was needed for the ordinary course of staying warm and common decency. I'm paraphrasing. And that then became the default for whether clothing was allowable or not. If it was needed in the ordinary course of being warm and decent, then it was not wholly and exclusively for work. And again, the default position for an expense is it wholly and exclusively for work? And wholly and exclusively, I'm using that sort of antiquated phrase deliberately because that is the phrase that HMRC look to. So obviously, most of the clothes you wear on a day-to-day basis, even for an audition or an afternoon recital or something like that, would not be wholly and exclusively for work, because in theory, you could also wear it to a wedding, or you might wear it because you wanted to look smart or whatever. But there is an explicit kind of subsection of that, which says if your clothing is a costume fundamental to the performance of your job, then it's allowable. And for the costume example, they give you an example of a black tie waiter. And they say the black tie waiter in the ordinary course of his work as a self-employed waiter has to wear black, not black tie, but, you know, little DJ and whatever. And therefore it's a costume and it's allowable. So I would say concert dress, tuxedo, all of that sort of thing is a costume and is therefore unequivocally, no problems, totally allowable. The grey bits are the ones to do with very nice dress that you bought explicitly for a late afternoon recital where full concert gear, floor length gown was over the top. Or in the case of the men, it was a nice suit, but it wasn't DJ or black tie. And that is a much more grey area because you wouldn't really define it as a costume in the way that you would your concert gear. And so that takes me to trying to find this email. So let me just see if I can. Hang on.
Whilst you're doing that, Sinead, I'm just going to answer Anton. So he says, so does HMRC calculate your income based on your expenses instead of your incomes? No, what you do is your income is your net income is calculated by your gross income minus your expenses. So then you're left with a net income amount on which your tax is calculated. So your net income will be higher, obviously, if your expenses are lower than if you've got lots of expenses. So your tax is calculated from your net income. I hope I'm not incorrect there, Sinead, in saying that, but hopefully that answers that question there.
Here we go, I found my links.
What happens if your expenses are more than your income? Okay, so that would be a case where you don't pay any tax. It's highly irregular, I think, I would believe, but you also will have to go over a certain threshold of income, something around the 12k annual allowance before you start paying income tax. So is that, sorry, Sinead, you're the expert here, go for it.
I'm going to jump in on this if that's okay,
please.
just because and I won't do too much in it because it sort of takes us outside of the broad remit of today, but very briefly, I do want you to be aware of this. There's another change that's happening by default in your 24. Yeah, Charlotte, that makes sense. By default in your 24-25 tax return, which is the assumption now is that self-employed people are declaring their income and expenditure on what's known as the cash basis. And the cash basis basically means you recognize the income when it hits your bank account, you recognize the expense when it goes out of your bank account. The more formal way of accounting is you recognize the income when it's legally definitely due to you. In other words, you've done your gig and somebody owes you some money for it, or you've committed to the expense but not yet paid for it. You've said you're going to buy this expensive viola, but you haven't yet paid for it, but you've signed a contract to say you will buy it. That's known as accruals accounting or traditional accounting. Why this is important for you to know is that on cash accounting, which I'll say again is now the default, but only from this year forward, loss relief, which is where your income is less than your expenses, in other words, you are making a loss, you're minus amounts in your self-employment, loss relief, if you're on the cash basis, is not, you can't allocate it to other income to reduce the other income. If you are on traditional accounting and your self-employment is minus, but you need to earn a living somehow, so you have a PAYE job somewhere else to support yourself while your self-employment gets going, on traditional accounting, you can take that self-employed loss and you can apply it against your employed income to reduce your taxable income in the round. But you can't do that if you're on the cash basis. So just watch out for that and make sure, to be honest, cash basis is probably a sensible choice. Without knowing any of you, just willy-nilly going to say it's a fairly sensible choice. And if you're using an accounting app like Xero or reconciling, which means accounting straight from your bank account, then you're probably using cash accounting anyway. But making a loss, in other words, spending more than you earn as a self-employed, is a totally conceivable scenario, and you take that loss and you carry it forward against subsequent years. The easy way to do it, or one of the ways to do it, is to carry it forward each year until you can offset it against, as you get going and you start making more money in future years, you offset it against your profit. Louise, please jump in and make any additional comments you want to about cash basis versus accrual. Louise, I'm going to introduce her to everybody, is an accountant, so she is going to have her opinions as well. Would you like to say anything?
I couldn't put it in the chat. I couldn't work the chat, so I gave up. Yeah, cash accounting rules changed for 24-25. You now can carry it across to other income.
Oh, thank you. I did wonder as I was saying it whether they had made that change, because it did seem like an obvious change that they should be considering if they were defaulting everybody into it. So thank you for the correction. That makes very good sense.
There's quite a lot of changes that came in for 24-25, which, you know, you just have to go back to my email I sent.
Yes. Well, if you'd like to put your email in the chat, Louise.
No, I couldn't work out the chat, so yeah, that's why I raised my hand. Sorry, yes. I shall leave you alone now.
Yeah, no, thank you for the clarification. And yeah, just for those of you, in case that was a little bit techie, what Louise was saying is that there are updates to the old cash basis rules that now make it more flexible to relieve, you know, to use any losses if your income is lower than your expenses, in particularly often in the early years. And I was citing slightly out of date rules. But because everything's changed, it makes sense. HMRC are catching up on the accompanying bits around that as well. So, but the fundamental thing is cash basis is the default. Keep a record of your losses. You can carry them forward against profits in future years. You can what's called sideways relieve them. In other words, use them against other income if you need to. There we go. That's that. You'll see I put in the costume stuff for a bit of light reading. Concert wear. There's two different links there. The actors and other entertainers expenses is the one that kind of cites the example of the waiter and how costumes are an allowable one. The first one is the duality of purpose, the one that references that original court case. And those are the two things to just be aware of when you're thinking about whether your clothing that you're buying is allowable or not in terms of an expense. And also don't rule out the idea that there is that it might be a bit like a car or broadband, that again, as with everything, there can be, although wholly and exclusively is the starting point, HMRC do recognise as a self-employed that there is often a mixture, and they're prepared to recognise that as long as there's something to substantiate your claim. I hope that makes sense and it wasn't too technical.
No, super helpful. Thank you.
Sure.
I'm sort of aware of the time and how much time we've taken of yours, which is you've been so amazingly generous with your expertise and knowledge and with your time. So I just want to say a huge thank you to you for coming on and doing us some myth busting and telling us why it's a good idea for us to go digital and how we might do that. And our big takeaway is that we need to try and have a separate bank account for our business, separate from our personal. If anybody wants any help with any of this, Sinead is here, I'm here.